Hey, what's up, everybody? So I didn't have the chance earlier to update you guys or kind of walk through as much as I wanted to. I ended up getting halfway distracted during today's session. I was calling stuff out. So ideally, I want to kind of mark through a little bit of what I was seeing um, and hopefully this kind of lets you kind of see where my head was at this week. Um, okay, so starting with the daily time frame, right? So start with the daily time frame again. So this is what I called out over the weekend is that I wanted to see price potentially trade back into this volume imbalance, really look to find a low and then really start to attack this buy side that we built up. So when you think power of three again, right, on the weekly basis, you should be thinking consolidation. If we're going to go up, consolidation, manipulation, distribution. We'll always distribute to a liquidity level. This could be a low we're taking out. This could be a fair value gap. It could be some sort of liquidity marker. We're always going to distribute to that. We're always going to trade to another liquidity marker, whether it be a high, a volume imbalance, a gap, or whatever, right? It's the same thing. We're looking down here. We're just looking for the opposite thing up here. So consolidate, manipulate, distribute. And so what we saw here is that we distributed to this volume imbalance. A volume imbalance is a gap with wicks running through it, but no candle bodies. And that's exactly what it is. Price is going to be drawn to this level until we create a candle body in this zone. So that's just another version of a gap or a very specific type of gap, right? So again, I'm gonna get some of this stuff off the chart so you can see it's a little clearer. But so this level up here, this 17,000 level, this is our target for the week. So it's our all-time high. And so we know there's going to be buyers over here or buy side liquidity. And so if we know that there's going to be buyers over here in green, buyers, um, we know that they're going to want to buy in at these levels, right? So that means we need to get some type of sellers or sell side liquidity to be able to sell to these buyers because every buyer needs to have a seller, every seller needs to have a buyer. So in order for us to hit these highs where the buyers are going to react or be at, we need to have some type of liquidity to sell to them. So we want to sell to the buyers, right? So that's the logic. So that's why we always have to go down to go up and why we have to go up to go down, right? So yesterday, if we look at the charts yesterday, right? If we look at the charts yesterday, we had this huge wick action down here. So we just back things up, right? We had this huge wick action. Get rid of this. Hopefully I don't have to redraw this. So we have this huge wick action down here. So obviously this is our target for the week, that high. And the secondary target, again, how I mentioned on the recording, will be last week's high, which will be this. These are really our two levels that we want to see price hit, right? So yesterday or today or yesterday, what we saw happen is we saw price traded all the way down into this 4 hour fair value gap. And so when we start breaking down these things down to the 4 hour time frame and these lower time frames, the 4 hour, the 1 hour, the 15 minute, all we want to do is just build the case that price is going to want to do what we say it's going to do. And what do we think it's going to do on the weekly time frame? We think that it is going to consolidate, manipulate, distribute, right? And so usually, and I talked about this in the summit, usually that consolidation will start out Sunday, Monday. Monday usually will be the counter trend day. And it could be Monday, Tuesday, up to Wednesday. If we get to Wednesday and after Wednesday New York session, we start to see that we haven't really started to form that high or really trade above the high or the opening of the week and really start to form that bullish trend, then most likely this is a counter trend week, meaning that we're not going to see what we want to see play out, right? And usually in those situations, I might take the counter trend position, but a lot of times I'm just gonna say, okay, this is probably gonna be the loss for the week, and I'm just gonna get flat. So for instance, um, so Monday, so usually our counter trend week is Monday, potentially Tuesday or Wednesday, up to Wednesday New York session, right? somewhere between Monday, New York session, and Wednesday, New York session, we want to see this form the low of the week in this case. If we were looking for downward move, it would be the opposite or the high of the week. But we want to see somewhere between Monday, New York session and Wednesday. We want to see the low of the week formed and start to trade away from that, right? Really heading for our target. In this case, our target is here. So ideally, what we wanted to see coming into today is price do something like this, right? So the opening of the week was here. This was the week. Wanted to see price trade down, consolidate, manipulate, distribute. Well, what's down here, right? We have a 4-hour fair value gap that's been traded to, but there's a little bit of imbalance that hasn't been filled in yet. So that right there. So we wanted to see price potentially trade down. That's exactly what we got on Monday. So we traded all the way down through this and more so respected this fair value gap, right? So we saw all those things that we're trading to because we want to trade to liquidity, right? We're trading to some type of liquidity or imbalance. So that's exactly what we saw here. Boom. We respected it. This looks beautiful, right? So coming into today, what we wanted to see was again, price maybe give us potential uh accumulation, manipulation, and really start to aim for these highs. Right. And so unfortunately, what happened today is if we get to today, this is Tuesday. So this was our New York candle. Oh, sorry, this is London that ended in New York. So 6 to 10 a.m. Right. So the market opened up, and this is what I was dictating on the Telegram. So the market opened up and did a couple of things, right? So we saw right before the market opened up, how I knew that the market was going to definitely go down to start things off is we were building trend line liquidity, right? And so this is the concept that the market will build counter trend trades opposite to what we want to see. And so potentially this could have been a trade right here, right? But I just don't want to take counter trend trades, right? This could have been your setup that happened right after the market opened. And so what I was looking for is I was looking for potential buys, right? I don't want to sell this because we think the overall trend for the week is going to go up. So all of this is just a liquidity grab. We're just trying to grab liquidity to eventually go back up. And so what I saw that I wanted to see was coming into New York session after this happened, we got to our time window. We had traded past the low of the day, right? This is our 9:30 candle. We took out the low of the day, right? And so we got to here. Uh, oops. We got to here, sorry, on the 1 minute time frame, and we were in our time window just barely. It was like 9:45. And so I saw a break of structure here, right? The fair value gap that opened up. And this is what I wanted to see what happened. I wanted to see price come here. And initially, price respected this fair value gap, but then just completely ran through it. So that lets me know that we're extremely bullish. And then from there on out, I really just didn't see another opportunity to take this trend. So we didn't really have a break of structure here. We didn't really see anything else play out. Going into the 10 o'clock hour, I'm gonna speed this up. Tax. There was really nothing here. This was something else that I saw, but I just didn't feel confident taking it because this overall is a 15-minute fair value gap or 4-hour fair value gap. And so when we started trading underneath this, I just didn't want to take that because it's resistance basically. It's going to act as resistance. So I didn't want to take that. And so if you're trading under a higher time frame liquidity marker, the higher the time frame, the stronger the liquidity marker is going to be. So here, so basically when this price all consolidated and was doing that, I just kind of figured that, especially since we were trading underneath that 4-hour consequent encroachment, which is this right here, figured that at some point, since we kept respecting it, we were probably going to take this to the downside. And so that's kind of what I wanted to do. Again, these could have been opportunities to go short if you were thinking in line with that counter trend bias, but wanted to see prices go up. So I stood that out. And again, when you're counter trend, you don't really want to do that because you're not gonna know for certain when the trend is gonna end. So where we're currently sitting right now is on this 4-hour time frame. Another thing that kind of let me know that we're probably going to go back up here is these relative equal highs. So this was the market open at 9:30 today. This was the high of yesterday or the high of last week. We didn't even take out the high of the week. We traded up uh Tuesday, 2 a.m. So we formed this high and then we didn't trade. We did not take it out for the rest of the week. So that kind of lets me know that this low was or high was left in, this high was left in. So we're probably gonna come back up there. So what I'm seeing now and what I want to constantly monitor are these right here, these relative equal lows, because the signals that liquidity build up and we potentially could come back down here. And this might be where I'm looking for everything to reverse at. So I'm looking at this level and then this low. And this might just be a week. If we get to tomorrow and the end of tomorrow and we're still trading down, then this is just a week that I'm going to have to sit out, right? And just not look for any bullish setups. And so if we get to Wednesday or there's Wednesday after New York session and we're still making lower lows, then that's probably the trend for the week. And this whole week will probably just be a bearish week. And so in the bigger picture, all we did was create a weekly order block, right? And so the days where you're going to lose, the days where you're going to need to shut the laptop off are going to be the days most likely on the higher time frames that are creating weekly order blocks. For instance, this, right, is an order block on the weekly time frame. And the algorithm is obviously going to respect it for future price, right? It did. But during this week, we would have looked for things to buy and we would have traded back into this gap and just kept making lower lows for the week. So these are the weeks where you're going to have to really be watching out for a potential counter trend week. And if that happens, just know it's the bigger time frame picture playing out. But don't try to go for broke on the trade. Like you should be taking 1 to 2 trades during your Tuesday, Wednesday, Thursday, right? So that's 4 or 5 trades for at minimum, at maximum 0.5% risk, right? So 0.5% risk on a challenge account, maybe 1% risk on a personal account. And so I'm obviously not going to advocate. I'm not telling you to take these trades live. I would prefer you guys stay in the demo and you guys have to make the decision of whether you're going to trade live or not. That's not something I can really tell you. But that's my personal strategy. Um, Again, not an investment advisor, just a day trader, right? Teaching my strategy. So again, so this is what I'll be looking for. So anytime you see relative equal highs over a liquidity marker, that's very apparent, right? We could come back down here. If that happens and we don't see any type of reversal going into New York AM or PM session, then this whole week will just probably be a liquidity marker to set us up for next week. And if that's the case, then we just have to sit flat and then we have to come back next week. If that, then that's perfectly okay. Now, again, we have respected this volume imbalance so far, so I ideally would like to see price find a reason to continue to go up. We're currently not trading within this fair value gap, but we are respecting the order block. So these are all things that I'm going to note, right? I'm going to note where our fair value gaps are at, where our market structure is, what liquidity markers are nearby, relative equal lows, relative equal highs, gaps. All these are the things that I note from like 8 o'clock in the morning to 8:30 before the market opens up. I just come to the terminal and I sit down and I try to get a better understanding of what's going on here. But the thing that I do like a lot is the fact that we have not taken out these highs. Like that was very apparent that we didn't take out the high of the day and we didn't take out the high of the week, both this week or last week, or this all-time high. And so just because we're keeping these stuff intact means that there's volume up here that the market wants to either build or protect to take out at a later date. So that's me. That's what I would have to see if I was looking at the market this week and looking at dollar index. We've traded higher. And this is exactly what we wanted to see checking out. So we could be setting ourselves up for that run going lower um, this week. So that's what I'll be looking for the rest of the week. I will be looking for cases and opportunities for this thing to go higher. And so if we know coming out tomorrow we have to take out a level of liquidity. We could go back down here one more time, sweep this, and then go up, right? We know there's going to be sell side liquidity with these relative equal lows. We could go as low as this prominent low, sweep that, and come back up, right? So those are the things I'll be looking at. But ideally, I want to see price, accumulate, manipulate, distribute tomorrow. And what we're just trying to do is figure out where that's going to be. So I go to the 4 hour, go to the 1 hour, see if I see anything. Relative equal lows right there. Those two right there. I feel a good feeling we'll probably come back down here tomorrow. 30 minutes, same thing. Go to these and see what you see there. And so you should be building the case that everything falls in line with the bias. And if we get to Wednesday and it's not falling in line, that is your after Wednesday, that's your okay, it's time for us to probably maybe reverse our bias for the week and just trade in line with that. And or probably the better option is to not trade at all. So hopefully that makes sense. And hopefully this helps with what I was thinking this morning. I tried to record my session earlier and I wish I would have, but it wasn't working and I was kind of multitasking. So hopefully this shows you what I was thinking and it's okay. Again, it's okay to take a loss. It's okay. What it's not okay is to not protect your trade, not monitor your trade, and not use proper risk management, right? So like that's the big things. You're going to lose. It's okay. Don't try and be perfect. Protect your loss every single time. A lot of times I welcome the loss because it lets me reset my mentality and my kind of like my approach for the trade. So that's what I try to do. And it's okay. I'm telling you, it's okay. You will be fine. So, all right. So thanks. Hopefully this makes a lot of sense. And hopefully you guys get it. If you don't, please let me know and I can try and break this down a little bit more. These are going to be the days, these potentially could be the weeks or the days where you're just, there might be the most confusing and probably the best opportunity to blow your account, especially if we do continue on with this counter trend week. So hopefully that makes sense. Again, let me know if it doesn't. Appreciate it. Peace.